What's up, guys? How are you doing? Lots of news to get to with Rivian. They just reported earnings. So today we're going to recap some of the recent news. I got these lovely graphics we'll get to here. And I'm going to talk about some Rivian pricing and what prices I would like to buy the stock at. So I think Rivian is a great company here, and we'll talk about whether or not I am going to be buying stock here. But Rivian's intense focus on the vertical integration of software, autonomy, and I think is going to make them a premier automotive powerhouse alongside Tesla. And that's going to be across all vehicles, not just EVs, but gas or ICE cars as well. So like I said, recap some of the key takeaways from earnings and potential upsides here, as well as risks to the business. And I'll let you guys know what price I'd like to buy the stock at. So I thought this was really interesting that electric vehicles are currently only 8% of the entire US market. And the upside for Rivian, I think, is based on two facts that are true. I guess a fact, well, these days you never know, but two facts I consider true, we'll say. So, number one, the transition to EVs is inevitable. That 8% number is going to increase tremendously over time, and eventually it will make up the majority of car sales. Now, this poses an immense opportunity for any automotive company making a serious effort at EVs today. And number two, the other factor at play here is I think that internal combustion engine ICE companies are destined to fail in a head-to-head battle with pure play EV companies. The recent decision at many of these legacy automotive companies to scale back their EV efforts, like we saw with Ford, their decision to discontinue the F-150 Lightning, will be viewed, I think, when we study history as the final nail in the coffin for legacy automotive. Now, this is going to take years to fully play out, perhaps even a decade, but over time, this situation for ICE manufacturers will become increasingly dire. These bloated, slow moving ICE companies, even if they decide to simultaneously bring back EVs, will create inferior ICE and EV products compared to their pure play EV counterparts. Rivian and Tesla have and will continue to leapfrog all of the traditional competitors. Now, those two companies together produce less than 10 different vehicle models today. A single legacy automaker produces hundreds of cars, makes, models, trims, and all sorts of other variants. There's no world in which this is going to work over time. We've already seen this play out with cell phones at their peak, or sorry, at its peak in the mid 2000s. Motorola was producing well over 100 distinct phone models and variants in a single year. Today, Apple makes three variations of the same phone every year. More industries than not will continue moving to the streamlined, vertically integrated winner takes most model. The future favors technological innovation over mass variety, and doing mass variety hinders technological innovation. Now, here's a little factoid I thought was quite interesting. So, RJ Scringe recently mentioned in an interview that Rivian's customer base is now approximately 50% Republican and 50% Democrat, roughly. So while administrations try to tilt the scales and mainstream media tries to make this a political issue, both actors are failing. It's refreshing to see a normalization in that, wow, it turns out that not only do our brains still work, but capitalism also works. So I think this is a huge win for humanity. People will simply purchase the most compelling product on the market, and over time, due to the facts I listed above, that is electric vehicles. So Scaringe also stated that in the future, he believes there will be more than one automotive company, but less than there are today. Now, this is a trend across industries playing out. We're moving toward duopolies or a handful of companies. You have 10 mega corporations that own the vast majority of foods you see in a grocery store. You have Coca-Cola versus Pepsi, Apple versus Google phones, Amazon versus Walmart, mega cap companies increasingly influencing more and more of our life in the world, Amazon, Microsoft, Google, Meta, etc. You get the point. The point is, this is going to benefit Rivian as their pure focus on electric vehicles that encompass features of the future, like AI, like autonomy, will cement them as one of the big players in the auto market. Now, excluding China, I see a future that consists of perhaps Tesla, Toyota, Rivian, and Volkswagen as the main players, while all of the rest of the traditional players consolidate, fade into obscurity, and or become niche products. Now, there are only two automakers today in the West with software-defined architecture. It's Tesla and Rivian. Legacy automakers outsource to 150 plus companies to build their software. That doesn't even begin to factor in the hardware side. The engine complexity of internal combustion engines requires about 2,000 moving parts. The simplicity of EVs leads to an electric motor made up of about 20 moving parts. Now, none of this takes into account zonal architecture. Legacy gas guzzlers have up to 3 miles of wiring, which is very heavy, expensive, and you guessed it, usually made by yet another set of companies. Modern EVs use zonal architecture, which places small hubs near the wheels and lights. And this enables companies like Rivian to cut their wiring by literal miles, making the cars hundreds of pounds lighter. So this wiring would stretch miles. Like that's how much wiring is in these cars. So in the case of Rivian and Tesla, it's able to make the cars hundreds of pounds lighter without all that wiring, which further simplifies the supply chain and also reduces costs. Now, car companies will also need autonomy and AI integration at a high level. This is the future. This is where we're heading. This becomes much harder if you try to bypass or outsource autonomy like the legacy players have. As I mentioned, Rivian and Tesla are the only US players at scale doing all of this in-house. Now, it's only a matter of time until traditional automotive or ICE makers cannot compete at mass scales, which brings us to Rivian's present situation. Now, if you take a look at this graph here of the 2025 US electric pickup sales by model, we're going to look at three graphs here. This is the first one. At first glance, it appears Rivian is actually losing. However, there have been some changes and there's something massive coming. More on that in a second. But on the truck front specifically, the F-150 Lightning has been discontinued. Tesla scaled back their cheapest Cybertruck. Interest seems to be waning in it, and there's a massive issue with affordability on that too. So these are factors that can only help the R1T because those were the best sellers for 2025 in the EV pickup market. So, the 27,000 F-150 Lightning sales that made up the bulk don't exist anymore. I think the Cybertruck, at best will stay the same. They cut the cheaper model. So it seems like it's only heading in one direction. Now, if we go to this next graphic here, you see that Rivian again is in last place. So they were in last place on the R1T sales, the truck sales, as far as EV trucks. They're in last place for the top 6 best-selling electric SUVs in the US. Now, at least they are on the scoreboard. And you're probably saying, why would I invest in this company? There's 5 that are way ahead of them. There's something big coming in the pipeline here, but you get the point there. And then the cost comparison. Now, this graph kind of explains the other two. The Rivian vehicles are just significantly more expensive than anything in this category. And historically, it's not who they've competed against. They've been competing against more of like the Range Rovers, maybe your Ford Bronco, stuff like that higher end market, Lexus, etc. And it shows here, right? So it's not really a fair comparison. That's why it looks like Rivian's getting destroyed because their car is like double the price. But we've got the R2 coming. So while things look bad with these, the major shakeup is that the R2 is coming. That's going to be their cheaper model. It's coming in Q2 of 2026, and it's going to be, I believe, Rivian's Model 3 moment. Now, this is a cheaper SUV that I think is going to leapfrog Rivian into this more affordable segment here, which, again, it's impressive that they've actually been competing really and selling anything, I think is a testament. But the car's going to get a lot cheaper now, and it's going to start at $45,000. Its performance will be significantly better than all but the Tesla Model Y. Here, I'll go back to this SUV chart. So it is just going to be an SUV for now. I'm sure the truck is coming, but it'll be cheaper than everything on this list except for the Honda Prologue. And I guess the Model Y is, let's see, the price is here. Yeah, so it'll be the third cheapest option. But again, that number is going to continue to trend down over time, right? Just like what Tesla did. I think that they'll continue to drive the cost down and it'll just get cheaper as time goes on here. But at 45,000, making a compelling vehicle, you're going to obviously get a lot more sales. So I think that they'll be able to justify the premium price because as time goes on, people will realize the performance, the value for the money that they're getting, the software integration, everything I mentioned earlier is going to be there. But it will greatly help sales immediately as it's going to be 30% cheaper than the R1S. And over time, like I said, I think the price will continue to trend down. It'll become increasingly obvious that it is a much better value offer than the other SUVs, excluding the Model Y. So that'll take years for people to fully realize all that. Before that, there are sure to be buying opportunities. So let's talk about the stock here. Sure to be some buying opportunities between now and then, because when this R2 hits and leading up to it, there are going to be all sorts of sensationalist headlines touting things like the R2 is flopping, the R2 has been recalled. They obviously won't mention that, that's only a software update, most likely. And the minor product issues and kinks that come with launching a new product to mass market. We're sure to experience all of that. I'll just zoom in on this chart for today. We won't open the fancy one, but maybe in the next video, I do want to dive deeper into the earnings, but this is probably getting pretty long. So to keep it short, I will just talk about the price I want to buy. And then I'm going to do a part 2 video going deeper into the actual earnings report itself. But I think we're going to get opportunities to buy this thing. It's sure to be volatile, but with each passing quarter, I think the R2 will become an undeniable leader comparable to the Model Y. But, that's a 2-3 quarters at least away from now. So as far as the verdict and what price I'm looking to buy here, I'm not rushing out to buy Rivian here after this, 30% or so spike it just had. What a crazy year it's been. It's up 30% since earnings on February 5th. Or I think earnings were they were a week ago, so later than that. But February 5, Rivian was, Rivian's up 30% since February 5, and yet year to date it's down 9%. I mean, we're in an insane market right now. And this is the other thing, like I think I wouldn't be surprised to see a general market pullback that would probably be healthy. This is usually the time of year that it happens. I mean, not usually, but happened last year, and I could just see things going south. Nothing, not like a crazy crash, but a 5-10% pullback on the S&P is healthy after the crazy run it's been on. But companies like Rivian that are unprofitable are going to get hit way harder if that were to happen. So I'm kind of getting ahead of myself here, but I wanted to talk about the 3 problems and what price I would want to buy the stock. So 30% run up after earnings here. Those issues I outlined with the headlines that are going to come, inevitably there'll be some hiccups with the R2 launch. That'll cause the stock to drop. But I do like the stock at the right price, which to me is around $10 or $12. And that's where I've been selling puts. So that's a level to me where the risk to reward ratio makes sense for Rivian in its current state. I don't want to chase it here. They're not out of the woods yet. And there are 3 potential problems. So like I alluded to, number 1, a general market correction. I wouldn't be surprised to see Rivian down 25 to 40% plus, depending how bad it is. And let's just call that a 5 to 10% correction on the S&P. I think Rivian will get hit hard, especially after this spike it just realized. Number 2, like I mentioned, the R2 launch may stumble, may flop in the beginning or appear to, as it takes some time to catch on. Rivian doesn't really do commercials. They're doing the Tesla playbook. They're getting people in the vehicles for test drives, and they tell their friends, and it sells itself because it's a great product. But that obviously takes some time. And number 3, Rivian's still in its cash burn phase. So on that topic, if we get a confluence of unpleasant events, all 3 of these could happen and further exacerbate each other, and thus the stock price on the way down. I mean, things happen quickly. It's crazy to think that in the great financial crisis around 2007 to 2009, everything was obviously going to crap, but the auto industry experienced like a 40% drop in sales. So in the grand scheme of things, that's not even that crazy. And it basically bankrupted like the entire industry. I mean, General Motors had to get bailed out. So and those are profitable companies. I'm sure they were not being managed very well then, as they have not been in recent years. But Rivian is burning cash as is. So if you get some sort of scenario like that, it doesn't even have to be that bad, but even last year, Rivian saw a decline because of the loss of the tax credits, et cetera, et cetera. 10-20% dip, creates problems, and even bigger problems when you're unprofitable. So that's why I don't feel the need to chase it here. Long term, do I think it'll be great? Yes. Do I think they're going to go bankrupt? I'll get to that in a second. I'm kind of getting ahead of myself again. Under $10, I think it would be a gift, and it could get there again in the right confluence of factors. Now, the company's projecting to burn through another $4 billion in 2026. That's according to their most recent earnings. They have $6.5 billion as of the end of Q4 2025, about $6 billion in cash and $500 million from a revolving credit facility. Now, they also expect in 2026 to receive another $2 billion from that Volkswagen joint venture. That'll kind of happen throughout the year in chunks, or at least like half of that, I think, depending on winter testing, and then the other half maybe by the end of the year. So they effectively have an $8.5 billion war chest, but they're burning through it quick. I mean, they're going to burn through half of that this year, and that's like in a best case. But with the backing of Amazon, the joint venture with Volkswagen, I doubt Rivian will be allowed to go bankrupt. It would take a lot of things going wrong for them to run out of cash or even come close. So right now they have about 2 years of runway left, but there were positive signs from the Q4 results that the cash burn will also decrease. And once the R2 becomes established, assuming there's sufficient demand, the company should enter profitability and smoother sailing. And then it will be up and to the right, and everything will be great as soon as the market sniffs out that that's the direction it's heading. But they're not quite there yet. It's probably going to be at least, I don't know, 9 to 12 months before the R2 is hitting volume sales, if not longer. So it's not going to, like, as soon as they start pumping off the line, be creating profit. It's going to take time, maybe another year. And that's probably in the best case. So I think this is a great place to end the first part of this. I want to go over some specifics from their Q4 results, 2026 guidance, and some technicals, but it would get probably too long. So comment part 2 down below if you'd like to see another video on that. If you enjoyed this, share it with someone who will also enjoy it. Don't forget to like and subscribe. Let me know your thoughts on Rivian and this industry in general down in the comments below. Thanks for watching. I'll see you guys on the next one.